You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central, 1 p.m. Eastern. It is time to view some volatility. That means it's time for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network upon which you guys have been mainlining all week. TWIFO, double dose of the option block, OPR, boot camp, interviews, all the rest of the fun stuff, advisors option, everything else that hits you out there on the network all throughout the week. Always some fun surprises scattered in there. So if you like what you hear for this show, for anything we do here, keep those reviews coming on your platform of choice. It really does help in these troubled times, new folks to discover the program and indeed the network. Keep those questions coming too, because I can't speak for everybody here, but I enjoy hearing from you guys out there. And let's see who we're hearing from on the old program today. First, let's go back on out to the fortress-like GIOVINAZZI compound there on the shores of Maine as the waves crash against the palatial walls. He was social distancing long before it was cool and trendy. He is, of course, the rock lobster himself, Mr. Andrew GIOVINAZZI from OptionPit.com. By way of Carmen Line Capital, Mr. Rock Lobster, welcome back to Volatility Views, sir. Are you completely recovered from your bout with Corona, sir?
I don't know if it was Corona, but I am recovered mostly. And I am now surrounded by snow, actually. No, the rocks are now buried in snow.
Ah, so you can no longer see the waves crashing against the palatial fortress walls. Does that drive away the clam pirates, or are they still out in force?
Actually, right now, the water has driven away the clam pirates as the tide has come back in and vanquished them. So, no, but they will actually, they will take those clams even when it's snowing out. They're a hardy bunch.
Wow. What does one get for a pound of clams, a Maine clamsies? How much does that go for?
So I would say I think they do a bushel. They come in here and do a bushel, which is probably like $150 or $200. Literally I think they rip through in about 30 minutes, and they fill up a bushel and split. So it's $5 a pound retail. So yeah, I think they do and maybe it's $150, $200 for a bushel. It's probably 50 pounds of clams.
Not bad. Couple $100 an hour. Not bad. That's like skilled labor.
It is, and there's no boss. Just the tide. The tide rolls in, and they have to leave.
They have to dodge your buckshot from your shotgun, but other than that, it's a relatively safe. Relatively safe.
Or my small white dog barking at them from the cliff.
Get off my lawn, or in your case, get off my provincial share of the ocean here that belongs to my
mud flat. To my hallowed mud flat.
That belongs to the GIOVINAZZI compound. Then we're also going to go maybe a little bit farther south from the land of Maine, where we find, once again, we are joined by Mr. Tom JARCK, the volatility product specialist over there at MIAX. Tom, welcome back to Volatility Views, sir. It has been too long.
Thank you, Mark. Happy to be back on the show. It has been far too long. Looking forward to a good show today. Been pretty busy out here on the East Coast. I'm also by the water, but by the ocean, and I haven't really seen anybody out there clamming. That's more in the bays by us, but all's good. Just I didn't get hit too bad with the storm. I had like 4 inches where I live, so it was a pretty easy recovery.
Yeah, you guys had a pretty nasty nor'easter swing through that area. But let me ask you this, Tom. I asked this to Shelley and to Simon on the show last week, but you're the volatility product specialist over there. So you've been specializing in spikes in a year where there at least were no futures, and as a result, curtailed options volume as well. Now the futures are back. It's the first trading week in over a year. So Tom, how excited are you, sir, to have it all back?
It's very exciting to have it back, and I'll take credit for it all because when I joined, I'm just kidding. No, Shelley and I know Shelley and Simon were on last week, and you heard from the big guys on the product, and so I've been very involved in chatting with a lot of clients, a lot of data providers, everybody on the product, and it's been pretty exciting. We created this really cool resource guide that you can making it very easy for traders and salespeople and whoever just to access it and look up information. But, some trades went through this week. The launch was successful, but being that it was, I like to call it like a shotgun launch, we got the approvals and they, 2 days later, the features were launched. So from a technology side, everything's been perfect. Everything's been great. We're just looking for some volumes to pick up, and, that'll take a little bit of time, but we will get there.
We'll get there indeed. Now it's time to get right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody. Welcome to the Vol Review, the portion of the show where we dive deep into what's going on in the world of volatility this week. Another interesting one, a little bit of red on the screen to end the week here. A week that was mostly green, even though sometimes those green rallies had a little bit of false starts to them. Coming into showtime today, we see most of the major indices in the red. S&P and Dow both off pretty much exact same percentages, a little bit north of 0.5%. NASDAQ slightly unched on the day, not even 0.1% to the dark side. So NASDAQ, as it is wont to do these days, kind of doing its own thing a little bit out there. That means the volatility indices have been in for some interesting developments as well. Kind of liking where they're looking right now. You might need a little bit more movement for my prognostication. Let's just glance really quickly here Actually, I'm not looking too bad. certainly a little bit more optimistic than some of the other more dire prognostications to the dark side for volatility. But we'll get to that in a little bit. But if vol wants to gently drift down just a little bit throughout the course of the show, I wouldn't hold it against it. Coming into showtime now, we're seeing spikes at about a 22.5. That puts it down about exactly 2 handles from where it was this time last show. VIX cash at about 22.25. That puts it down about 2.25 points from last show. And our old friend VVIX, still frothy, still elevated, but floating right around that 113 level. So shy of that 120 level we often use as a barometer for things are action-packed out there in the vol landscape, but not quiet by any means. It's down about 4 points from what it was this time last show. Since he hasn't been on in a little while, we'll start in Tom's neck of the woods. Tom, we'll get to the activity in spikes in a minute, but first, just catch us up. What's been catching your eye? You haven't been on in a little bit, so maybe walk us through a little bit. What are your thoughts on how vol has performed, maybe post-election? A lot of surprising developments since then. I don't believe you've been on since the election. And also, anything catching your eye out there in the vol space this week, sir?
Sure. One thing I will say, I've been a little bit, out of the day-to-day activity, but because I've been obviously focusing on some other things lately. Obviously going into elections, there was a lot of anxiety. There's still a lot of, back and forth. And I think just recently, there's a lot of talk about the, Georgia runoffs. So there's a little bit of, of bid to the vol because of that. But one of the things I think is kind of interesting, and I haven't run the numbers, and I meant to do it this morning, I just didn't get to it, is just with the rebalance with Tesla tonight, how that's going to affect the, if you look at realized volatility going back the last, 6 months on the S&P as the current index, how it's going to look with the new, with Tesla, the new index going forward. So if you can basically recreate the index and then run a historical analysis on that. I didn't get to do it today, so I meant to do it this morning, but I didn't get to it. But if that new index is going to be a little bit more volatile, I would think so. I haven't run the numbers, but so that's something that I think that people should be aware of and think about and look at. There's still a lot of headlines out there, and I thought there'd be a little bit more, anxiety about all these. When the news came out about the the Russians, the cyber hacking and things like that. So. I think that was kind of brushed away a little bit. But, with the market at the highs, there's still been all that call buying. There's still been a good bid to vol relative to, historical regimes. So nothing, but there's really, I haven't really seen anything out of the ordinary other than, we are going through the holiday season. You do have some seasonality, but there's still a lot of events and news and, things on the radar to be aware of. So it's it's definitely there's been a lot to watch. I apologize for not making it on election eve. I did listen in for a little while, but I couldn't really spend the whole night with you guys. But it was kind of interesting.
You didn't have 4+ hours to spend with us on our election night special time. Well, lucky for you and for everyone else who missed it, it is part of the network now. It's been cut up into bite-sized half-hour pieces, so a little bit more manageable. Now, if you couldn't handle listening it, try talking for 4 hours, sir. I challenge you to do that.
I think I got on when you had started to lose your voice a little bit. And, but I think, just in general, everybody's, still focusing on the usual stuff, the stimulus, the Brexit, shutdowns of government, the Tesla rebalance, the party control out of Georgia. But, so it's but it's been good. I've been really, to be honest, I've been really focused on the just a lot of spikes related and other exchange-related, work recently. So,
well, there's certainly a lot to unpack there. We'll get to all of that in a second. First, let's go out to the land of the rock lobster. Sir, we're not busy chasing out the clam pirates. You have to take off your glasses so you can become full vol man, sir. What is lighting up your tape out there this week?
Well, interesting that you say as far as like individual stocks, and I know this is our vol show, but I don't know. Somebody's lit a fire under the solar stocks in the last 2 weeks. Apparently, they must have some sort of magical solution, like they turn sunlight into energy or something. I don't know, something like that. They're 20%, 25%, and I think 8 trading days. So I don't know if everybody is getting in and how long that's going to be. But I think that's indicative of just the general vol that we've had. It's not everybody. I don't think it's the market players like freaked out about going to 3,000 or 2,300 again. I just think actually it's just a lack of call sellers. I actually was talking to one of my students about like the skew index, and it's kind of a call put thing. Skew is call put, so it's not just the puts; it's also where the calls are relative to the puts and how much people are paying up for them. Again, I have like my closet theories, Green New Deal and all that stuff, and anything ESG is going bonkers as a thing. So, but it's just strange that it's all happening, with jamming it into 2020. From a vol point of view, there's still that volatility kink over the election date. If you look at SPX, look at late December, early Jan, and then just the post-election time. I think the market actually is a little bit freaked out about that, as we just alluded to here. That it's a thing. It's not a nothing. It's still a something. And realized vol, we had Don on yesterday. It was great to hear his voice again. There's implied realized vol is down a bunch. The market is kind of settling into this thing, although individual names are nuts. But we have a 9 handle in realized vol, and VIX is not coming in. There has to be a reason. We have 2 vaccines. Wall Street, like lots of reports now, is they're expecting 50 million people to be vaccinated in the U.S. by the end of January. So clearly vol is not getting that message, and I know we've seen a lot of fits and starts with COVID over the last 8 months. But I'm not seeing that bid for the back end of vol come in quite yet. Like I said earlier, like vol puts are cheap. So anyway, that's kind of my rundown on this. And we got 2 weeks going into the holiday. So you have a weird confluence where you got holiday trading, but then you have an event on the 5th. So, I think in the short term, things kind of don't do very much. Everything's just kind of in suspended animation. And I think it's like cop in the donut shop trading, right? So police officer doing their thing, they go to the donut shop, everything's cool. All of a sudden, like somebody's robbing a bank, and I think that's kind of what I feel vol's going to be like as we go into, like January 5th. So you can take that prognostication for what it's worth and $1, and you can almost afford a cup of coffee at McDonald's.
The tasty cup of coffee, and also very hot, so don't spill it on yourself. Tom, I know you have some thoughts on all things solar out there. It is interesting to see what's going on in these individual components of the marketplace and how they impact the broad overall market. I think Andrew joked on the option block yesterday that all stocks are about to become Tesla, but it makes up 17% of OI in the options market right now. So it's a huge driver for volatility, whether someone wants to admit it or not. But I'm curious for you, Tom, in addition to all your thoughts on everything solar, we can finally discuss it again. We always talk about the VIX futures term structure, but once again, we also have a SPIKES futures term structure to contend with. Now, I know it's early days. I know it just launched. Only a few terms are even being quoted so far. Like you said, it was kind of a bit of a shotgun launch right out of the gate, but also catch us up on that. You seeing anything interesting lining up out there? Or is it pretty much shaping up like what we're seeing in the VIX futures land, sir?
Well, yeah, it's going to be, by definition and by the math behind it all, the 2 term structures are going to be, pretty much, they should be identical for the most part. So, the term structure is pricing in, obviously, some, volatility down the pipe, and, it's still pretty big. It's relatively flat overall, looking out. And, so just, like we just said, that, realized vol is very, muted, but, this bid is it just remains out there, and it's just I haven't been in the flows lately, so I'm not just seeing what the real true demand is and what's really holding it up. But I just think it's memories of last year and not people not a little bit of risk aversion going into that, and I don't think it's as much hedging going through the market, but But yeah, so once we get a few more months quoted on the spikes term structure, we'll be able to make some true comparisons. And once the activity picks up a little bit, as I said, I do anticipate it to be picking up hopefully in the short term. But I want to mention something about the solar. So my theory is on solar. Why people like solar? Think about all the cryptocurrencies and the cold storage and the mining and all the energy that takes. So maybe people are building solar fields to mine cryptocurrencies. But anyway, that's a sidebar. But you never know. Anyway, I'll leave it there.
You never know, indeed, sir. But we do know what's going on out there in the realm of all things VIX futures. We said on the show last week the VIX futures term structure was looking kind of weird out there of late. I kind of referred to it as a plateau, but now it's really just more of like a steep angle up and then flat. I guess it's a plateau, but plateau usually implies it's coming down on the other end of the term structure. Right now, it's not. Going all the way out here to the AUG contract here, we're seeing, let's see. Well, before we get to that, DEES obviously rolling off the board this week, so we don't have an update on DEES, but the Jan future, not quite 2 points, about 1.8 points premium to the cash. That's about a little over a quarter of a point, about a third of a point higher than it was this time last week. So staying a little bit juicy, a little bit frothy on that front portion of the curve. Of course, Jan include for the Jan runoff in Georgia, but certainly a lot of juice placed in there as a result of all the consternation over that Feb future, over 3 points distant to the cash, about 3.25 points out there. And that kind of reflects that sharp angling up of the front portion of the term structure. Then it does plateau around that 26 level. It was about 26.5 last week, so that portion has come in a little bit. It's a little bit north of 26, around 26.10, but it stays at that level pretty much exactly all the way out to August from there. So March all the way through to August, if you want to know what the VIX futures are looking at, just quote one, and you pretty much got all of them out there because they're all fluctuating right around the same level, about a tenth of a point different right now, which is very strange and not at all usual for what we've seen out there in the past. Mr. Rock Lobster, you weren't on the show last week. What are your thoughts on this funky plateau structure we're seeing out here in VIX futures these days, sir?
You know what? I'm just sticking with it's all election all the time until it ain't. And I think that all of that will revert hugely, or if the Democrats take the House, I don't know what happens. They're pricing about straddles $150. And again, vaccine, all this stuff. I just think January could be a very pivotal term. So I think that plateauy term structure is very election related, and just that vol is sitting up there. And what we alluded to before, just nobody is selling juice, right? You have stocks ripping. There's just not a lot of. I think a lot of juice sellers on the upside have their face ripped off. So they're just, they're not around. And that vol ain't going to come down until somebody starts selling something.
Indeed. Maybe they're selling Spikes options because, spoiler alert, listeners, the futures are back and the Spikes options are trading a little bit again, which is kind of nice. They always hovered around 100-odd contracts open throughout the entirety of the year, even when the futures were gone. But now we're seeing more paper, sometimes that amount of paper going up, or if not more, just in a day. And it's only been a week since the futures are back. Let's break down the top 5 positions out there in Spikes options land again. Again, this is kind of what I talked about as well. Maybe some more relevant strikes coming back into fruition. We were seeing crazy things, 60 handle in the money puts and calls going up. And that's kind of a barren paper. Now that the futures are back, you don't really need those anymore. So we're seeing the Feb 30s, number 5, number 4, the Feb 22 calls. Number 3, the March 40s, numero dos here, the March 30s. We'll get to all that in a second. And then number 1 with a bullet out there are the Feb 11. So there still are some meaty options on the board, but nowhere near as many as there used to be. There's like a couple of pretty active days out here this week, Tom. Wednesday seems like it was the biggest day. We saw, looks like a pretty active vertical, that March 30-40 vertical was kind of the trade du jour. Someone liked putting that up this week. Saw 50, a lot of that going up. So 100 contracts overall. So that's pretty much more than we saw in the whole OI in the previous week, just in that one trade. So that's kind of nice to see out there. That went up on Wednesday and again on Tuesday, another 50 lot there. So a couple of hundred contracts going up out there. We also saw a Feb 2230 vertical going up as well this week. So verticals trading. I remember a lot of Ds went off the board last week too. So all of that has been replaced and then some out there in the OI. So Tom, kind of nice to see that the futures haven't been back too long. We're already starting to see more size trades and more relevant trades, dare I say, than those kind of extreme in the money things we were seeing before, Tom.
Yeah, in general, I mean, it's I think there's been a little bit more press out there from us and just reaching out to folks and making, putting spikes back on the radar for many people. And so yeah, it was good to see a few trades going through. It looked like, to your point, it looked like there were spreads. And I don't know the exact trades which way they went, but I would assume they were. Someone just putting on some spreads. Either I think they're buying the call spreads, but you never know. That would make more sense to me. But so it's good to see some activity. And like I said, once these option markets, I believe, should tighten up once they get a little more liquidity in the futures, and hopefully that'll attract a little more, that will attract some more activity and things. But just to the listeners out there, I mean, obviously the screen markets are wide, but things obviously do trade in, can and sometimes do trade inside that. So I don't, that's, I think I heard one of the other option commentators recently explaining that to the community as well, that, some things are illiquid and will always trade on the bid and offer, and other things you got to kind of play around with, put some stuff out in there in the markets in between and, see where you get filled. But I do anticipate these markets to tighten up in the near future. Mr.
Rock Lobster, I know you were busy fighting for your life against that dastardly corona this week, sir. But in between that, did you have any inclination, any desire to maybe sling a one lot in Spike's options? Were you watching it go up this week, sir?
I haven't yet, but I'm happy that there is now a solid competitor to VIX, so that will be nice. But I will be slinging it because it is my job to sling volatility options. And I'm happy to have Tom here. I'm happy to have somebody who can embrace the tinfoil hat. I love that theory on the solar, by the way. I just realized that I think it's a requirement that all guests on this show for the Option Insider Radio Conglomerate has to be able to put on that tinfoil hat to come up with a good theory to explain things. But I love the idea, by the way, because the crypto is just going nuts. So somebody's got to pay for all that energy. Might as well be the sun.
You diehard Northern New Englanders, you like yourself a good conspiracy theory. Us Southern New Englanders are far more sensible, far more level-headed. Let's go on out to what was going on out in VIX options today. Kind of a level day out there as well. Not a lot of paper lighting up the tape out there in VIX options today. About a little over 200,000 contracts on the tape as of a few minutes ago. The ADV is about 435,000, so down slightly from last week, but not a ton. Pretty much unched from last week. Let's see what the hot positions are out there in VIX options, the top 10 sizable spots. And by the way, last week you had to really look to find a call in all of VIX options land. This week you could find 3 of them in the top 10. So that at least is perhaps a sign of something changing out there. It cost you only 104,000 contracts to break into VIX top 10 right now. So that shows you kind of how light things are. In fact, nothing gets even over 200K in the entire top 10 out there right now. So that shows you things are kind of light. Let's see. Number 10 is 104,000 of the Jan 20 puts. Number 9, $1.07 of the Jan 18 puts. And our first call in the top 10, 111,000 of the Feb 50s, the 5-0 calls. Number 7, $1.20 of the Jan 75 calls. So interesting call strikes. Lighting up the tape out there this week. Number 6, 142,000 of the Feb 17 puts. Number 5, $1.43 of the Jan 19 puts. Number 4, $1.59 of the Feb 15 puts. Numero trace here, $1.68 of the Jan 22 puts. Number 2 here, $1.70 of the March, our first and only March on the list, March 17 puts. And number 1 with a pretty much a BB, not even a 22 caliber bullet, only 182,000 of the Jan 40 calls. So calls are actually the number 1 open position in VIX right now. So that's kind of interesting. Again, a bit of a break from the put palooza we've seen out there of late. Let's see what's lighting it up out here today and what's been lighting it up out here this week. We really only had one sizable day of options activity out here in VIX land. Let's see. Today, I said about 203,000 contracts on the tape. The big trades out here, the top 5 most active contracts, 25,000 of the Feb 50 calls, as well as 25,000 of the Feb 19 puts. So maybe a bit of a risk reversal going on out there. Number 3, 16,000 of the Jan 70. So once again, those very far out of the money call strikes lighting it up out there. Number 4 here, 13K of the Jan 19 puts. And rounding out the top 5 here, March 90s, 90, 11,000 of those bad boys going up today. So weird call strikes in the crosshairs today. Yesterday, Thursday, 291,000 contracts on the tape. The big, most active contract, 20,000 almost even of the Feb 15 puts, 16K of the Jan 23 puts, about 13,500 of the Jan 37.5 calls, 12,000, almost 13,000 of the Feb 50 calls, and round out the top 5 yesterday, about 11,000 of the Jan 22 puts. Wednesday, similar volume. You can see why the ADV has kind of been slowly eroding out here. 266,000, so just slightly over 250,000 contracts on the tape on Wednesday. Most of that coming in 2 big prints here. About 39,000, I should say 2 most active contracts. It wasn't all one print. The Jan 19 puts, 39,000 of those, as well as 36,000 of the Jan 22 puts. So it looks like maybe some verticals / rolls lighting it up out there. 14, almost 15,000 of the Jan 21 puts. 12K of the Jan 25 calls and almost 12K of the Jan doubles, the Jan 55 calls. Tuesday was really where the lion's share of the action was this week, closing in on 1 million contracts, 931,000 contracts on the tape. On Tuesday, a couple of those really active. The Dees 23 puts doing 168,000. That's almost a whole day's worth of paper the rest of the week, just in those Dees 23 puts. Similar numbers, not quite as aggressive, but still pretty strong for the Dees 22 puts, 109,000 of those going up on Tuesday. So those 2 contracts alone accounting for well north of 250,000 contracts, accounting for well more than a day's worth of activity, pretty much any other day the rest of the week. Number 3, 69,000 of the Jan 22 puts. Number 4, 61, almost 62,000 of the Jan 19 puts. And round out the top 5 most active on Tuesday, 38,000 of the Dees 25 calls. So the first relevant call we've seen going up for a while there. And Monday, decent paper, 446,000 contracts on the tape. The most active contract, the Dees 30s, 26,000 of those bad boys, followed by the Dees 21 puts, 23,000. The Dees 25 calls, 22,000 as well of the Feb 80s, 80. Someone likes, I've always said it, February seems like it's the month where weird, aberrant upside goes up, and maybe some people hearing those old shows and deciding they're going to do that again, because Feb seems like it has some interesting call strikes open. Let's just put it up there. And 17,000 of the Feb 22 puts. Mr. Rock Lobster, sir, anything catching your eye out there this week from a VIX options perspective, sir?
Don't you think it's well for VIX, right? What's leading the charge in volume right now? Poots. I mean, when was the last time we saw that? So I've been buying them. I have been wrong. I've been wrong not to sell the ones that I've owned when they blew up, the puts last week. And I'm still going to buy more and keep with my thesis of backspreading the vol. But I'm going to wait until a couple of weeks from now before I buy any more, I think. As much as I think it's all a bunch of crap and the vol is going to go down, I have to temper my enthusiasm. But because I think we have a couple of quiet weeks coming, Christmas, New Year's, and then the election. There's going to be, I think, a sort of seesaw back and forth, save for some sexier names like solar and crypto and all that stuff. And but yeah, I'll wait till the future premium maybe gets a little richer, VIX maybe settles a little bit, the contango gets deeper. And there could be some nice in-the-money plays in VIX and huge potential decay for VXX. I mean, VXX is buying up these futures in the mid-20s, so it could have an ugly day. But anyway, I mean, the volume is saying everything. There's a lot of put volume, and what are you getting? Like the 21 puts are $1.60 out of the money cash-wise, and they're only $1 for January, so $1.10. They're just not very expensive relative to what could happen. So we'll see. Remember, this is a Jan 20 expiration, not the week before. So you get a little more time At least it'll feel like a little more time for this cycle. So, the inauguration will happen, things will happen. So we'll see. But again, I think it's a relatively the puts are relatively inexpensive. And I think that's another reason why people are piling into them.
Speaking of Jan expirations out there, Tom, you said you've noticed some interesting developments around those early Jan weekly expirations in the S and what you're seeing in terms of vol out there, sir.
Yeah, just I was just looking at something and noticed we talked about the Georgia runoff elections, and that's on the 5th of January. And if you look at it, just take out of the equation, accounting for calendar days and business days and things like that, but just looking at basic Black-Scholes vols, you have the 4th of January trading at like a 2-vol discount to the 6th. So that's a decent vol spread there between those two option maturities. So just something I want to highlight. And then as we were talking, a buddy of mine actually hit me on a chat in IM, and he said that he quickly calculated the Tesla impact on the index. I haven't run these numbers, and these are not factual, but he thinks it comes out to around like 75 basis points of increased volatility in the index with the inclusion of Tesla going forward. So it's and I was curious too from this audience. I guess it's hard to really get responses, but with the rebalance on the close, if we could see some distortions and moves when people, in theory, everybody has to sell all the names and buy Tesla. So you could see some movement on the SPX index on the close. But keep in mind, a lot of those things are there's a lot of pre-positioning and trading around that, and there's a lot of firms that will. Those people that are benchmarked to the rebalance, to the index, a lot of firms will offer them, kind of I hate to use the word guarantee, but a guaranteed closing level. And sometimes they'll pay money for that. Sometimes they'll charge for it. And they'll use that and trade around it from the index rebalance desks. So anyway.
Let's see what they're trading around out there in the product. The Rock Lobster just invoked that everyone loves to fade. Good old VXX, getting a little bit of that juice to the downside again, off about exactly a point from where it was this time last week, right around 17.25, coming into about halfway through the show here. Decent paper on the tape today, about 213,000 contracts on the tape today. That's north of the ADV. The ADV is only 181, and that's up a little bit from last week, just up about 6,000 contracts. So getting a little bit more action out there in VXX land these days. Let's break down the top positions out there really quickly. Number 10 out there in VXX, 19,000 of the DEES 18 calls. Number 9, 19,000 as well of the Jan 10 puts. Number 8, also 19,000 of the Jan 20 calls. Number 7, 22K of the DEES 30s. Number 6, 23,000 of the DEES 20s. And then we got 24,000 of the DEES 16 puts. Number 4, 26,000 of the DEES 15 puts now for 26,000. Number 3, 29,000 of the Jan 18 puts. Numero dos here, 30K of the Jan 25 calls. And number 1 with the bullet out there, 62,000 of the Jan 15 puts. Actually back to even, 50-50 calls to puts out there in the top 10 of VXX, which is kind of interesting. In terms of what's lighting it up out there today, it looks like March is leading the dance. Almost 22,000 of the March 20 calls on the tape today, followed by about 12, almost 13,000 of the DEES 17 puts, and then about 9,000 of the Jan 15 puts, 8,500 of the Jan 17 puts, and about 7,500 of the DEES 17 half calls. Mr. Rock Lobster, I know you as your Volman alter ego, but also a lot of your crazies in your pit chat like to sling a little VXX. Anything catching your eye out there these days in VXX land, sir?
Again, I would say like puts. There's a lot more. There's a lot more puts going. Downside puts. 16. I think I was. I know this sounds crazy. I know it sounds crazy, but if we see like a 17 or 18 handle in the VIX futures, which I think we're trading 24s. You can see VXX, take a pretty huge haircut. Remember, this is all kind of proportional. So 20, 25% move down on those futures. VXX can be taken to the woodshed and given a whack, pretty good thrashing. So, but we have not seen that number for VIX futures in 9 months at this point right now. So that's why I think there's a little bit of, all those junk puts, even like in the UVXY too, they're coming to life because of the potential thrashing they could have. Don't know if it's going to happen. It hasn't happened in 2020. But I think that's the reason why there's a lot more interest in the puts than normal.
Let's talk about, you mentioned the junk UVXY. Let's get into a little bit of that really quickly. To UVXY, as of a few minutes ago, down about 11.2, down a little over a point, about 1.1 handles from last show. The ADV ticking up out there, about 140,000 contracts, up about 7,000 from last week. Today, about 143,000 on the tape, so a pretty active day out there in UVXY already at its ADV. Let's break down, let's do a top 5 out here in UVXY. Number 5. Actually, let's look really quick. Let's go to top 10 because there are some 10 strikes, but they're all puts. So I don't think it's our friend at Hercules unless he's changed his MO quite a bit. Someone else playing on the 10 strike in the different direction these days. Number 10 out there, 12,000 of the March 13 puts. Number 9, 12,000 as well of the DECE 10 puts. Number DECE expiring today, so the 18th. Number 8, 12,500 of the June 5 calls. Interesting. Number 7, 12,600 as well of the Jan 10 puts. Number 6, 16K of the DECE 10 half puts. Number 5, 19,000 of the Jan 11 puts. Number 4, 19, almost 20K of the DECE 11 calls. Numero trace here, about 22K of the Jan 14 puts. We got a little put strip here for the top 3. Number 2, 29,000 of the Jan 13 puts. And number 1, with a decent bullet actually, grown some size out there, 35,000 of the Jan 12 puts. Today, the most active 13,500 of the DECE 11 calls, followed by the DECE 11s expiring on the 24th, so next week. 8,400 of those bad boys and about 6,500 of the DECE 11 half calls, lighting it up out there today. Mr. Rock Lobster, have you been slinging any UVXY of late or any of your crazies out there? You've mostly been wait-and-see mode, sir.
We haven't slung a lot. We have looked at some of the, like Jan Feb, some of those downside puts. That look stupid and that have no chance, but actually they do. So that has been the slinging of late, mostly because, like I said, the next couple of weeks, I don't think we're going to see a ton of action unless there's a surprise, upside vol surprise. But again, that late Jan, Feb cycle, I think all bets are off as far as what could happen, especially if, they vaccinate like 50 million people or 40 million people or something like that. And there aren't too many hiccups there. So that would be the slinging of late in that UVXY type their product.
Let's take a quick sojourn really quickly into earnings vol because there still is some to be found out there in the single name land these days. A lot of single names generating some vol, including we talked about it yesterday on the option block, just the surprising amount of vol coming in unexpected places. You expect it from Tesla now. We've kind of learned what's going on in Tesla. But Rite Aid, were you expecting a ton of vol? Well, if you weren't, you got some out here. Tesla, I should say Rite Aid. It's easy to confuse the two. It's pretty active. Rite Aid a little bit cheaper at about 17 and 11 coming into its earnings report. They were pricing in 13.2% in terms of earnings juice. They delivered nearly 30%. So one of the few names to really blow the doors. I got north of 22 for a while there. Today, it's given up a lot of that. Give up some of that yesterday as well. It's still right around the 20 handle, pretty close to about 1987 out there. Looks like it gapped up as high. Yeah, right around 22 change going into the coming out of that announcement, I should say, and then kind of slowly drifted down ever since. But we talked about it on the option block. Check it out yesterday if you want. Just talking about the long, sordid tail that is the year that has been Rite Aid. Extremely volatile name for your corner drugstore. It's not the kind of thing. You expect that from maybe your corner biotech lab that's got FDA approvals and is going nuts, not from your corner drugstore. So a lot of juice to be found out there. You can find the breakdown for Rite Aid. Let's do Leonard really quickly as well. They're after the bell on the 16th. They were pricing in, or I should say they were at 74 and a quarter. They were pricing in 5.7%. They delivered about 8%. So they had a nice little outperformance as well. So maybe we finally hit that inflection point, listeners, where they've been squeezing the vol, cycle after cycle. At a certain point, something has to give. Things have to start moving more than the vol again, and then things start to even out and widen out again. Maybe we're starting to hit that inflection point. I don't know. Let's look at the earnings season report really quickly from our friends over there at Orats. And, we're getting a little bit better, shall we say, this cycle than it has been in the past. Last season, for example, it was 74% average and close all the weeks averaged together. So you got pretty much 74 cents back for every dollar that you paid out there in vol. That's not good. No bueno out there. This week, or this season, I should say, it's at 97%. We've had a couple of weeks, week 3, 104%, week 4, 112%, week 5, 110%. So 3 weeks outperforming their straddles on average. So maybe, dare I say it, maybe we have hit that inflection point where it's okay, it's safe to maybe buy some vol again going into an earnings event. Still have some big names popping off. We have Nike after the bell today. Let's do really quickly. Them 138.34 is where they were trading. They're pricing in 558. In the past, they moved nearly $7, so a little bit light. Kind of hard to argue against that out there. Winnebago's a hot one out there these days. 58.91 is where they were trading. They were pricing in 505. In the past, they moved about 540, so a little bit light on the juice as well. And FedEx, everyone watching them going into the holiday season, 288.81 is where they're trading, as of this report at least. 16 3/4 is what they're pricing in. The past, they moved about $18. So people obviously getting the memo. Squeeze that vol a little bit, and we're seeing some outperformance as a result. So maybe we've hit that moment, listeners, that we've been waiting for, where the vol starts to make some sense again in earnings land. Let's see if your questions make sense. Spoiler alert, they always do. It is time to get into your volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
Probably should update that intro a little bit to this. We've been doing this for a long time. We opened it up with thought that people were going to call us with vol questions, hence the name vol voicemail. Turns out you guys were a little shy to actually leave your voice as a recording. You'll send in your questions any number of ways, social media, email, everything else, smoke signals, but leaving your actual voice as a recording for others to hear seemed like it was a bridge too far. So we don't really check that number much anymore. Maybe we should probably adjust that, but it will always be the vol voicemail just for old time's sake. Well, let's see what's lighting it up. By the way, we talked at the top of the show. It's been kind of a recurring theme on this program, many of our programs out there. Just kind of what's keeping vol juicy and frothy right now. So we asked you guys at this time last week, the poll expired earlier this week. You guys, quite simply, what's keeping all this juice here? What's keeping things elevated? And we gave you 4 choices, well, 3 choices really. Pandemic fears, stimulus concerns, or valuation/sell-off fears, and then other. You guys have hit us with a litany of others. Always fun to see what you guys are thinking of outside of the choices we give you. But valuation and sell-off fears won with 43.5%, followed by stimulus concerns, 32, almost 33%. And then we got pandemic fears, almost 19%, and about 5% for other. By the way, if you want to play right now, we have another poll out there that you guys are liking, but it's going to go away pretty soon. I want to make sure the podcast folks have a chance to play as well. If you're listening live, you can definitely go over to Ad Options and make your voice heard. But if you're listening to the podcast, you should have enough time to vote as well. About the name that's driving a lot of single name vol and indeed index vol right now, of course, Tesla. A little fun pop quiz for you. Tesla dominating the options market right now. Everyone's talking about Tesla calls, but hey, puts are pretty much all the top 10, if not beyond. You got to go all the way out beyond the top 10 to find the first call in terms of sizable positions in Tesla. So we asked you, what do you think the largest, what do you think that position is? What do you think the largest call position in Tesla is right now? We ask you to honor system. Don't look it up on your broker. Just try to use your gut. We gave you 4 choices: the June 500s, the Dece of this year, Dece 2020 700s, the Jan 80s, 80, or the March 650s. And so far right now, about 43% of you saying the D700s, followed by 30.5% of you saying March 650s, about 17% for the June 500s, only about 9.5% for the Jan 80s. If you have a thought, you want to play our game there, get on over to @options. Make your voice heard. All right, let's get out to this question here from Mike Jackson. Says, what are your thoughts on the state of the volatility market at the end of 2020? Looks remarkably healthy to me. There are more products available than ever before, and the volume is back at somewhat normal levels again. Love the show. DA, I love that. Well, thank you, Mike. Right back at you. We love you and everyone else who takes the time to listen and write in and review and everything else that you guys do. And you're right, it is very healthy. A lot of slew of products out there. If you want to trade vol, you got your products to choose from out there these days. Let's go around the horn. Maybe, Tom, we'll start with you because I'm sure you have some thoughts on this. It certainly is a much more healthy vol market from your perspective now that Spikes is back in action, sirs. What do you have to say here for Mike? What are your thoughts on the state of the volatility market at the end of 2020, sir?
Well, we are at the end of 2020, right? So, but I would say, yeah, there's a lot of new products that are being launched. Some more favorable than others. But I think it's going to take a little bit of time for the March memories to go away a little bit for the real vol strategies to come back into play. Whether it's overwriters, whether it's the condor sellers, whatever type of premium vol selling strategies are out there. And it will happen. It will come back, and it just takes a little time for these things to for the regime to change again. So I think it's healthy. That there's a lot more products. There's a lot more. The industry is really adapting to all these new products and things like that. So it's exciting.
Mr. Rock Lobster, same question for you, sir. What are your thoughts on the state of the volatility market as we wind down the dumpster fire of a year that is 2020?
Well, it's dumpster fire, but what's the S&P 500 up for the year? 12%, 14%, something like that. The Qs are up 35%. So odd, odd dumpster fire. I think a lot of it is, I think everybody feels bad, but the market is being pumped up. Now, how much of that is like the Fed helping things along and not every, I don't know. But from a vol product point of view, the last 2 months, VIX we haven't had a lot of action out of it. But I'm glad we have more products. I'm glad we have Spikes Futures. I'm glad we have all that stuff to kind of keep things active. But I'll tell you what, we've had a lot of calendar events for SPX and the vol space in general. Those tend to hold vol for a while until the event has passed for all you trading out there. Like Tesla going to the S&P 500, right? I'm just looking at the vol skew now between the DEES 31 and the DEES 24 cycle. And it's not nothing. That's actually that's a pretty decent amount of vol on the DEES 24 cycle, which obviously the market is thinking something's going to happen, shocker, as it goes into the SPX. So I think, vol is a great business. I like it. I like all the products. I'm glad to see some of like what I would call like the Spikes. I think is a good, more vanilla product. And I think it's good for people to get used to how the more vanilla products work. And they can use that as a little bit of a guide, to how traders view the S&P 500. Like the fact that you have a term structure a certain way, the fact that the term structure is bid all the way out. That's actually kind of a normal characteristic of volatility, to be honest, but not normally when we're at a 22 or a 23, more like when we're at a 12. So there is some vol in the future. So we'll see if it comes out of the market. And as of right now, I think we're still stuck around that. Jan 5 runoff date.
Well, it's time to see where VIX and Spikes are stuck as we go into the most difficult, the most dangerous part of the show, listeners. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, you know what time it is, the time when we embarrass ourselves for your amusement out here. It looks like vol didn't exactly cooperate with my request. I wanted it to trend down a little bit throughout the course of the show. It decided to trend a little bit in the opposite direction. Coming into the latter portion of the show here, we're seeing Spikes and VIX both at about a 22.85, so Spikes and VIX back and moving in lockstep out there right now, which puts me still the closest. I was at a $21 double. I was feeling a little bit of fade, but not a ton last week, as you recall, listeners. I know the Meatball and Sebastian were kind of wagering that the stimulus brouhaha would be behind us at this point, and they were wagering that was keeping volatility elevated in the 20s, and that would all be squeezed out because Simon was at a 20 even, and the Meatball was feeling the teens. He was at 18. So, spoiler alert, that did not come to pass. So I'm about 1.3 points away exactly on both Spikes and VIX Cash. Unusually, have both of them kind of lining up so nicely. The SPY divvy getting juiced out there. Usually, SPY divvy is what adds a little bit of, so shall we say, divergence between Spikes and VIX Cash. So I'm beyond our 1 point frame of reference, so I don't consider that a true victory, even though these are more turbulent times than normal. So maybe an argument could be made this year for widening that out, but we didn't. We stuck to our guns. We kept it at 1 point throughout the entirety of the madness that was 2020. So I'm the closest, but I don't consider it really a victory. So I will be magnanimous in my non-victory, and I will allow our guest, who hasn't been on in a while, to pave the way, to blaze the trail. Tom, if you would be so kind, sir, what do you... And actually, this is the challenge, actually, because I don't think we're going to have shows, because next week, of course, Christmas Day, and then we have New Year's Day the week after that, and I'm not going to drag anybody in to record on those days. So the question is, when should we prognosticate for as well? Let's see. If we go beyond these two, we'll have some content for you, listeners, don't you worry. But let's see. Let's coming up. So our next one probably would be the 2nd. So dare we do that? Do we prognosticate all the way out to January 2nd? Tom, you think you're up to it?
I think we should. Yeah, why not?
All right, have at it, sir. The floor is yours.
So for the 2nd of Jan, I'll take the Spikes. I feel like we're going to have somewhat of a we'll probably get a little bit of short-term bid going into that any kind of runoff and into the new year. So I'm going to go with a 2505. Excuse me, 2505.
2505. All right, I like it. I kind of see what you're putting down there. Of course, we'll be post-holiday there at that point, but not post-Georgia runoff. And a lot of people seem to think that's really what's keeping this juice in the front portion of the curve. So we won't have that moment to have that pass. Maybe all of these finally, will they, won't they, with the stimulus will be behind us. But then again, heading into the holidays, DC doesn't really like to work through a holiday pandemic or not. So I don't know if we're going to be seeing that out there as well. But I will go next. And Tom's at a 25. I'm not sure I'm feeling that much juice out there. I could see it. I'm going to say I was 21 double this week. I'm going to say a little bit more, though, as well, because we're going to be closing in on those Georgia runoffs. People are going to be hot and heavy. There's going to be political ads going back and forth and all sorts of contentiousness to kick off the new year, which is fantastic. That's what we need in the new year. That is 2021. Deep, divisive political rhetoric. But that said, I'm going to say a little bit north of where I was this time last week, a little bit north of where we are right now. I'm going to say 23 double, 23.55. So, Mr. Rock Lobster, a lot for you to parse. You're getting a pretty difficult task. Vol on Jan 2nd, sir. What are you feeling?
Well, Jan 2nd is a Saturday, by the way. Just, you know.
It would probably help if I could read a calendar.
Can we do Jan 4?
Yeah, it might help if I can read a calendar. That would probably help. Because next week and then the week after. So I'm sorry. I changed. You know what? I'll have to go back and reverse that. That's going to be a week later there, Tom. So if you want to revise yourself, have at it.
And that is after the Georgia runoff.
Yes,
so
that is after.
Revise, yes.
Go ahead, Tom.
So I'm just letting you know, Tom, I'm trying to be fair to you because I know that our host probably would not have been. He might have just, altered the barrel, say, oh, sorry, that's a mistake.
I'm giving him a chance to revise himself. You're the one who's stopping him from talking. So let the man revise.
We're all in the business of precision. I should have checked the calendar myself, and I didn't. So I relied on you, Mark. I'll just push it down a bit. I'll say like 23.95.
23.95 now for Mr. Tom. Again, that makes a difference. We are, of course, going to be post runoff at that point. So I kind of like where I am. I do think that's the right move though, to move it down a little bit. So tell you what, I'll give you a little bit more breathing room there, Tom. I won't be that close to you now, so I'll move it down to 23.05 from me. All right, you got about a point wiggle room here, Mr. Rock Lobster. Who do you want to scum, me or Tom?
All right. You know what? I'm not even gonna discount Boldy. I'm going 19. I'm going 19. Georgia runoff. My guess is they split the vote because that's kind of how this year has been. And then nobody's worried anymore, and we see a 19 ball. There you go. After the election. 19 on the number.
All right. We figured out how to read a calendar now. So going forward a couple of weeks, listeners, because, of course, Christmas Day this time next week, and then New Year's Day the week after that. So we're going to go spin the ball forward a little bit all the way out to the 8th of January, the Friday after, so that kind of second Friday of the new year. But, of course, post-Georgia runoff, where we have a nice, healthy vol market for that. 19 even on the Rock Lobster, so trying to support his friend, the Meatball there, playing in the teens once again. And then myself at 23.05, and Tom at about 23.95. What are your thoughts? You guys like hitting us up with your prognostications? Hit us up. Let us know. We'd love to include you guys as well. But unfortunately, that music means we've come to the end of a very interesting journey through the world of volatility. And don't worry, even though the holidays are coming up, we'll still have some stuff hitting the feed for you in the next couple of weeks. Maybe like the top episodes of Vol Views kind of rundown. I know we're going to gather together for TWIFO for one big kind of end-of-year spectacular look back of the year. Maybe we'll do something like that for Vol Views as well. Maybe we'll pick a day earlier in the week that we could do it. To whoever's available, we can get to look back on some of the crazy trends, the crazy trades, and also maybe do a crazy mega Vol mail palooza because you guys have so many questions right now. It might be a fun way to send off this year of madness into the ether. But before we go, let's go back around the horn. Let's start with Tom. Tom, if folks are intrigued, they can finally trade spikes again. Where should they go? What should they do to learn more, sir?
To learn more, you should go to MIAXoptions.com/spikes. Be sure to look at the new, on the overview page, there's a new video. That's been updated. There's some new branding at MIAX. You'll see that. And you'll also see that fancy resource guide I mentioned that's on there as well. So thanks very much.
Super fancy. Check it out, MIAXoptions.com/spikes, listeners. New branding, new design, new logo, all sorts of cool stuff. You know what's still there? The spikes data that you know and love. So you can get the current trading price, historical data. You can get all sorts of cool videos explaining what the heck spikes is, as well as a link to a cool little show called Volatility Views. I ask you, what more do you need from a volatility-oriented destination? MIAXoptions.com/spikes. You know where to go to learn more about all things Matrix, matrixexecutions.com. A lot of cool stuff cooking over there in terms of technology and putting up some interesting flow in all sorts of things, the vol products as well as the large major index products. Working on getting some interesting color and analysis from them rotated on the show in the near future. Stay tuned for that in the new year. In the meanwhile, matrixexecutions.com. The place to go. Mr. Rock Lobster, where should they go to learn a little bit more about vol and perhaps, dare I say it, if they're very lucky, schedule an appointment with the vol man himself?
Yeah, you can schedule an appointment with the vol man yourself. If you're interested, send me a note, Andrew@optionpit.com, and maybe I'll do a 30-minute freebie on a vol question you have if you're interested. Only if you say I heard it on that Volatility View show. Andrew@optionpit.com. 30 minutes. We can talk vol, do whatever you want. I'd be happy to talk to you and get a schedule going for you, put you on the schedule. Other than that, go to optionpit.com, Vol Trade Club, Vol Edge, Vol this, Vol. We've got all the vol you could possibly want if you want to put your learning hat on and your trading hat on. So let's say optionpit.com, go to the memberships area. And for me, Andrew@optionpit.com, if you want 30 minutes. 30 minutes, not on the clock. That's got a lot of value, but only if you say you got to say volumes. You got to say
Wow, that's a pretty good deal. 30 minutes with the Rock Lobster. Just don't let him scam you, listeners. You want Volman. So if he shows up with the glasses on, you're getting the Clark Kent version. You don't want that. You want Volman. So make sure you get Volman when you get your free 30 minutes. Andrew@optionpit.com is the place to go for that. And on behalf of the Rock Lobster, throw the meatball in there as well because he's been on many times throughout the year, as well as Tom and Shelly and Simon, everybody over there in MIAX and T3 and all that good stuff. And, of course, everybody over there at Matrix and, indeed, myself I want to thank all of you out there for downloading, streaming, subscribing to listening to Vol Views in such record numbers throughout the year. We love all of you for voting in our polls, for listening live, everything that you do. Keep those reviews coming. It really does help in this day and age. Stay safe out there as we head on into this final parts of this mad year. We'll have some more content for you before the end of the year. Don't you worry. And then we'll be back probably with some kind of end-of-year rundown, and then back again in the new year with more Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.